Hello and welcome everybody to this XTB market update on the sterling crisis. We are trying to keep you up to date on the latest events happening on this very volatile market that we've seen in the past few days and weeks, really, after we saw the pound crash almost to parity with the dollar, reaching a minimum of about 103. We have seen a marked recovery since then. The intervention of the Bank of England helped a lot. The U-turn when it came to the tax cuts as well helped the market recover, as a lot of doubts arose regarding how a lot of the payments were going to be kind of viable into the long run and the midterm when it comes to the spending for the government. So we're going to take a brief look at what the Bank of England did exactly, some of the highlights of what took place, and we're going to take a look at the charts just to see where we're heading and, more importantly, what happened in the last few days since we've had a last update. So just briefly, let's go over some points of what the Bank of England did. So firstly, the Bank of England delayed the start of QT, so quantitative tightening, from the beginning of October to the end of October, and announced an intervention buyback of long-term bonds, which we saw were heavily affected by the announcement of the new budget, or the mini budget as it was called. The aim was to lower yields at the long end of the curve, the segment of the debt market dominated by pension funds, so it's the longer term one. An increase in yields for such funds means that they need to increase collateral for rate derivatives. So again, very tight balance being kept by the Bank of England, trying to mitigate the impact of the budget announcement. A very sharp increase in yields would mean that these funds would have to quickly raise capital for higher margins, so collateral in a sense, which would require the rapid sale of some assets. This in turn would further fuel the repricing of bonds, closing a vicious cycle and creating systemic risk potentially. So we've seen that systemic risk being highlighted really when it came to the pound in particular, and as a result we saw the intervention of the Bank of England. Somehow in the short term, it seems at least, the Bank of England has achieved its goal, with yields at the long end of the curve falling significantly. However, new questions have arisen. The scale of the QE, so the quantitative easing, has been set at no more than 5 billion per auction or per day, bringing the total amount to around 60 to 70 billion pounds by the middle of October. The target for annual balance for sheet reduction remained unchanged at 80 billion pounds, and theoretically this would mean QT could pull as much as 140, 150 billion from the market. This is the amount that, combined with the expected rate hike of more than 200 basis points by the end of the year, implies tightening on a huge scale, which is what we've seen from several central banks. So having said that, let's take a look at the charts very briefly here. This is the pound USD cable chart, which you can see here. Last time we spoke about this, we were talking about it around this area here where it tested the minimum or the lows around 103. Some consolidation in this area, which I'm going to draw here with a rectangle, as you can see. Here, a lot of uncertainty surrounding the budget, and then following the announcement of a U-turn on the top tax rate, as well as the intervention of the central bank, we saw an increase in the value of the pound, but you can see here correlated to a decrease in the value of the dollar, because overlaid here on the blue candles is the US dollar index chart, which you can see in this very moment appears to have somewhat of an inverse correlation with the GBP USD pound, or GBP USD pair. This can be seen as well on the Euro USD pair, which I can show you here briefly in a second, but let's take a look at what happened. So after this very significant downward move, dropping this pair to the lowest level in several years, so a recovery of about almost 9%, 9.5% almost, before reaching the 114.8 area, which, as you can see here, previous support area and price reaction, and then a test of this area failed, and we saw a pullback as the US dollar regained strength today, and then towards the end of yesterday as well. So a pullback of about 2%, currently trading around 112.6, 112.7, and once again, you can see, if we draw another rectangle here, we can see that this area appears to be of quite some importance, maybe not as much as this one, but it's going to be interesting to see what happens once this area is tested. You can see also on this chart the SMA 21 purple line being tested by the pair at the moment, as the US dollar index appears to be gaining some strength. And I'll show you here on the market analysis section, US dollar trading higher against every currency today, really dominating, while the pound trading lower against every major currency, and also minors and emerging market currencies. So strength of dollar today, euro mixed performance, but as you can see, several percent below where we were just a few days ago. But the situation remains a little bit more optimistic than it used to be. Let's take a look at the UK stocks as well, with the UK stock index, UK 100. Slightly positive performance, so a recovery from this low here reached just a few days ago, well, really yesterday in the morning, and then we can see slight recovery after this upward move. Once again, here testing the purple line, which is the 21 SMA, the yellow line, which is the 8 EMA, so exponential moving average, and really a mixed sentiment today in markets as a lot of concerns have risen. So important to keep an eye out. Several things really have impacted the markets, not necessarily just the Bank of England. We saw the Credit Suisse, huge story, potential failure of the bank, and the collapse of the share price, so dropping almost 10%. That impacted market sentiment quite negatively. But really, at the moment, we're waiting for a few pieces of data coming in towards the end of the week with the NFP from the US, which could be impacting some of the markets. Again, we have several bank decisions following in the coming weeks, again, worth keeping an eye on, as well as the geopolitical situation. So hopefully this brief update was useful. Again, I showed you the GBP pair at the moment trading at an important level. You can see not quite as important as this resistance that, or this area that acted as a resistance around 114.8, almost 115, which you can see here was a support, but still interesting to keep an eye on. Bank of England and any UK related government news could be moving these markets in the next coming days. We'll keep you up to date with any further developments. Thank you very much for watching. Hopefully this was useful. My name is Walid Kudmani, Chief Market Analyst for XTB, and see you at the next video. Good luck with your trading.